Thank you for tuning in to leaddeveloper.com, where we simplify complex property development feasibilities, investment analysis, and everything real estate. Whether you're a seasoned pro or just starting out, our Google Sheets-based feasibility suite streamlines the toughest aspects of real estate. Lead Developer Feasibility Suite is trusted by thousands in over 17 countries. Our tools cover everything from quick assessments to detailed cash flow projections and more. Sign up today at leaddeveloper.com for unlimited free access to our expanding library of real estate tools. No credit card needed. Plus, get full support through Edge with step-by-step guidance, exclusive courses, and resources designed for your success. Turn numbers into narratives that win over investors and lenders. Join Lead Developer now.
Hey everyone, welcome to another deep dive. Today we're going to tackle something that's super exciting, but also can feel a little overwhelming when you're first getting started. Choosing the right property development strategy.
Right. There are so many paths you could take.
Exactly. But don't worry, we're going to break it all down for you. Specifically, we're diving into develop and sell versus develop and hold, sometimes called build to rent.
Two classics with totally different vibes.
And to help us navigate this whole thing, we're turning to, as always, some awesome resources from Edge. You know, that platform for property developers, always got some great insights.
Love Edge. Solid stuff.
Okay, so first up, develop and sell. On the surface, it seems pretty simple, right?
Yeah, I mean, the name kind of says it all, huh?
Yeah.
Develop a property, then sell it.
But I'm guessing there's a whole lot more to it than that.
You bet. It's all about maximizing your profit on each individual project. So think of it like you find an undervalued property.
Okay, got it.
Somewhere with a ton of potential, but maybe needs some work, and it's in a location that's about to, take off.
Prime example, folks. This is how you spot those hidden gems.
Then you transform it,
Yeah.
fix it up, modernize it, and make it something that buyers are going to drool over. Then, boom, you sell it for a profit.
Love it. But what does that transformation process really involve? What are the steps someone needs to take to make that happen?
So, first things first, you got to really understand the local market, like inside and out.
Makes sense. Got to know what people are looking for.
Exactly. Got to identify those areas with high growth potential. Maybe it's a neighborhood that's undergoing some revitalization, or it's near new infrastructure projects, stuff like that.
And then I imagine comes the planning stage.
Oh yeah, big time. You got to develop a super detailed plan. This outlines everything. Your construction costs, the scope of the renovation, timelines, everything.
Time is money, after all.
Especially in property development. You don't want any surprises.
Okay, so you've got the plan, the property's transformed, but then you got to actually find a buyer, right?
Bingo.
Mm-hmm.
So you need a killer marketing and sales strategy. You got to showcase all the value you've created, attract the right buyers, and ultimately get that sale that meets your financial goals.
And of course, you got to know who you're targeting. Families, young professionals, that kind of thing.
Oh yeah, super important. Knowing your target audience influences everything from the design of the property to how you market it.
Okay, so develop and sell, it sounds pretty fast-paced, exciting even, but what about the potential downsides? Are there any risks someone should be aware of?
Well, definitely. It's a lot more volatile than develop and hold, that's for sure. The market can be a roller coaster, right?
Absolutely.
So those ups and downs can really impact your profit margin. And then there's unexpected costs. Those can pop up and eat into your returns. And you got to be able to move quickly.
Time sensitivity.
Yep. If a property sits on the market for too long, that cuts into your profit. So you really got to understand market trends and always have a plan B.
Sounds like this strategy isn't for the faint of heart.
No, it's not. You need a certain level of comfort with risk. And you got to be adaptable, ready to adjust if the market throws you a curveball.
So strong financial planning and risk management skills are, non-negotiable.
Couldn't have said it better myself. You're taking calculated risks, aiming for those big rewards, but acknowledging that challenges might come your way. It's part of the game.
All right, so that's develop and sell in a nutshell. Now let's switch gears and talk about develop and hold. Some folks call it build to rent.
Right. And this one's a whole different ballgame.
So how would you describe it? What's the core idea behind this approach?
It's all about building a portfolio of rental properties, properties that are going to bring in that consistent long-term income.
Okay, got it. So you're not trying to sell it quickly.
Nope. This is a strategy for those who are in it for the long haul. They want that steady stream of passive income, and they're thinking about building wealth over time.
I like it. It's like building a real estate empire brick by brick.
That's a perfect way to put it. Each property you add contributes to your overall wealth. You're creating something that lasts.
So instead of aiming for that one big sale, it's about building a reliable stream of income that keeps flowing over time. What are some of the things that make this approach so appealing? Why do people choose this path?
Well, one of the biggest perks is instant equity. By developing the property yourself, you're instantly boosting its value, creating that equity right from the start.
That's a pretty sweet advantage.
It is. It's a huge difference compared to buying a property that's already developed, because you're essentially adding value through the development process itself.
So you're in control of building that equity from the ground up.
You got it. And then there's the potential for higher rental yields. Since you're not buying a finished property at market price, you often end up getting a better return on your investment through the rental income.
That's a big win.
It really is. Think of it like this. Your tenants are essentially helping pay down your mortgage while your asset is appreciating over time.
Sounds like a pretty sweet deal. Are there any other benefits that people should be aware of with this strategy?
Oh, absolutely. One of the most attractive things about develop and hold is the tax benefits that come with owning rental properties.
Right, taxes. Always got to factor those in.
For sure. Now, of course, I'm not a tax professional, so it's always best to get advice from someone who really knows their stuff. But there are some potential deductions you could take advantage of, like for mortgage interest, property taxes, even maintenance costs.
And those can really add up.
Oh, yeah. They can make a big difference in your overall profitability.
Okay, so we've got tax benefits, potential for higher rental yields, and that instant equity we talked about. It's really starting to sound like there's a lot to love about this develop and hold approach.
There definitely is. But just like with any strategy, there are two sides to every coin, and it's important to understand both. Develop and hold, it requires a different set of skills and considerations compared to develop and sell.
Interesting. So I'm guessing that means we're diving into those next, right?
You bet. We'll explore those factors and how they might sway your decision right after the break.
All right, welcome back. We just dug into the nitty-gritty of develop and sell and develop and hold. So I got to ask, where do you even begin trying to decide between these two strategies?
Well, it's a big decision, right?
Yeah.
It's going to impact your path for a while. So, yeah, got to think it through carefully. I'd say one of the best starting points is take a look at what the market's doing, those market conditions.
Yeah, that makes a lot of sense. I mean, a hot market versus a cooler one is probably going to lead to some different choices, wouldn't you say? Like, how would each strategy fare in those different scenarios?
You're spot on. So picture this. You're in a market that's absolutely booming, high demand, prices are climbing, you know the drill, that kind of situation. It might just favor that develop and sell approach. You could ride that wave, capitalize on all that momentum, and potentially get those high profit margins we talked about. The thing is, though, you always got to be prepared for the market to shift. What goes up must come down. Right.
Exactly. Ride that wave, but be ready to jump off before it crashes.
So what about a market that's, more stable? Things aren't changing so drastically. What happens then?
That's where develop and hold really shines. In a stable market, it's less about chasing those quick gains and more about slowly building that wealth over time. Through those consistent rental payments and the property value going up gradually, it's just a less volatile approach. More predictable, maybe a little less stress. But of course, even those stable markets, they still have some ups and downs, right? So staying informed about local trends, that's always key.
It seems like on top of all that market stuff, you got to really consider your personal goals too. Someone looking for a quick win might approach this whole thing differently than someone who's thinking long term. 100%. Your goals, they're your compass in this whole property development journey. So if you're thinking, I need quick profits to reinvest or need capital now, then develop and sell might be a better fit. But if you're thinking about building long-term wealth, maybe creating a legacy, or you want that consistent passive income stream, then develop and hold, that could be your path. Once you figure out your why, a lot of those decisions become clearer.
And of course, let's not forget about risk tolerance. Some people, they thrive on that, love taking risks. Others, not so much. So how does that play into this decision between develop and sell and develop and hold?
Super important point. So develop and sell, it's just inherently riskier, right? You're dealing with those market fluctuations, possible delays with construction, and that pressure to sell within a certain time frame. Got to be okay with all that and have a good plan to handle those potential challenges.
Yeah, develop and hold, it feels a bit more grounded, doesn't it? Like building a solid foundation over time. But I'm guessing there are still risks involved.
Well, absolutely. It's definitely more stable, but yeah, it has its own set of risks. Things like managing tenants, keeping up with property maintenance, and then there's always the chance that rental regulations could change. Those can all impact your returns. And got to be prepared for those times when you don't have a tenant, those vacancies. Plus the costs of finding new ones, screening them, all that jazz. It's less about riding the wave and more about navigating that long road.
It sounds like no matter which strategy you pick, there's no escaping the need for planning and really understanding the market.
You got it. Research, due diligence, realistic financial projections, those are non-negotiables for both. And, oh, can't forget the taxes.
Oh yeah, taxes. Always got to factor those in. I'm guessing they can play a pretty big role in figuring out which strategy is more advantageous. What advice would you give someone trying to navigate that whole tax maze?
Honestly, talk to a tax professional. Seriously, they're the experts. They can break down those tax implications for each strategy, help you find those potential deductions, and make sure you're making the best financial decisions. Tax laws are tricky and always changing, so having someone knowledgeable on your side, it's priceless.
All right, so we've got market conditions, personal goals, risk tolerance, and those tax implications. Anything else we should be thinking about before making this big decision? Any other key factors?
There are a couple that often get overlooked. One is time. Like, how much time do you realistically have? And what about resources? Develop and sell, especially at the beginning, can be super demanding. You're juggling a million things, managing contractors, overseeing everything. It's hands-on for sure. So got to ask yourself, do you have the time and energy to commit to that level of intensity?
Right, that makes sense. For some people, that sounds exciting. For others, it might feel overwhelming. What about the time commitment for develop and hold?
So develop and hold, it's a different kind of time investment. The initial development phase, that's still pretty demanding. But once those properties are bringing in that rental income, then the day-to-day, it becomes more about systems and processes, tenant communication, maintenance, rent collection, that sort of thing.
So someone who prefers a more hands-off approach maybe wants to focus on building systems that can be delegated or automated. They might be more drawn to develop and hold.
Exactly. It's about finding that balance between how involved you want to be and what each strategy demands. If you love that fast-paced, hands-on approach, develop and sell might be your jam. But if you're looking to create that more passive income stream and you've got those systems in place to manage it smoothly, then develop and hold might be more your style.
I really like how you've highlighted that both approaches have their own set of demands and rewards. It's not about one being better than the other. It's about finding the right fit for your own situation and preferences.
That's it. There's no magic formula here. It's about understanding those nuances, really thinking about your goals and resources, and then making a decision that feels right for your vision of success.
All right, so we've covered a ton of ground here. We've really dug into the details of develop and sell and develop and hold. Before we move on, let's quickly recap those key factors you mentioned. First up, market conditions.
Yes. Remember, a booming market, that might favor develop and sell, while a stable market, that might make develop and hold more attractive. Always keep an eye on those local trends, though, and be ready to adapt. Markets change.
Next, we've got those personal goals.
Don't skip this step. Figure out your why. Are you after quick profits or that long-term financial security? Knowing your goals, that's going to shape everything you do.
And then we talked about risk tolerance.
Be honest with yourself about how comfortable you are with risk. Develop and sell, that's the higher volatility path. Develop and hold, it's more stable, but you still got to be a good manager. Choose the strategy that matches your risk appetite.
And can't forget about those all-important tax implications.
For sure. Definitely talk to a tax professional to figure out what each strategy means for your taxes. They can help you maximize those benefits. Taxes are complicated, so having an expert on your side is key.
And lastly, we've got those available time and resources.
Think about it. Do you like that fast-paced, hands-on environment? Or do you prefer a more systematized approach, where things are running smoothly in the background? Develop and sell, it's more demanding up front. Develop and hold, you need to manage things over time, but it does allow for more flexibility once those systems are in place.
Wow, a lot to think about. But hopefully this breakdown has given you a good foundation for deciding between develop and sell and develop and hold. Now, to really bring all of this to life, we're going to wrap up this deep dive by looking at some real-world examples.
Exactly. Stay tuned, because in the final part of this deep dive, we're going to see these strategies in action. Real-world examples can really solidify everything we've talked about.
Welcome back. So we've covered a ton of ground already talking about develop and sell and develop and hold, but now let's bring it all to life. Let's see how these strategies actually play out in the real world.
Yeah, love it. Real-world examples, those are the best. Makes it all click. So, okay, let's start with develop and sell. Imagine a developer They specialize in revitalizing these historic properties, but in up-and-coming areas, urban areas. And they find this like amazing old building. Could be a factory, maybe an old warehouse, something that's been kind of neglected for years.
Oh, I can totally picture it. Like a diamond in the rough, tons of potential, but yeah, needs a lot of work.
Exactly. And this developer, they see that vision, right? They see like trendy loft apartments,
Okay.
a space that would be perfect for young professionals, artists, anyone who's drawn to that area's unique character. So they crunch the numbers, think about all the costs, and of course they're thinking about potential challenges like those zoning regulations, anything to do with historical preservation. You got to factor all that in. And then they create this super detailed plan, one that balances preserving the building's charm with adding in those modern amenities that everyone wants.
I bet those renovations are no joke. I mean, bringing a historic building up to those modern standards while still keeping its character, that takes some serious expertise, doesn't it?
Oh, absolutely. It's a balancing act for sure. But luckily, this developer, they've got experience in this niche. They know their stuff. So they put together this amazing team, contractors, architects, everyone who understands how to work with these historic structures. And they're really focused on showcasing those original features, exposed brick, those high ceilings, those huge windows, while also incorporating those modern kitchens and bathrooms that everyone wants and making sure the whole thing is energy efficient.
So they've got these incredible spaces now, but then how do they actually connect with those buyers? How do they get the word out?
Marketing, baby. Targeted marketing. This is where they really shine. They know exactly who their ideal buyer is, right?
Yeah.
Someone who loves that urban vibe, appreciates history and character, wants a space that's totally unique. So they show off that transformation with gorgeous photos, virtual tours, all that good stuff, really highlighting that blend of old and new. They might even team up with local businesses or art galleries to host events, get people talking about it.
It's like they're creating a whole lifestyle, not just selling a place to live.
You got it. And because they did their homework, position the property perfectly, they end up attracting multiple buyers. Creates that sense of excitement and demand, and ultimately they sell those units quickly, often above what they were even expecting. Big return on their investment. They took a risk, but they managed those challenges and it all paid off.
Awesome. That's a perfect example of develop and sell in action. Okay, now let's flip the script and talk about develop and hold. What kind of project would be a good fit for that approach?
All right, so let's say we've got a developer who's really passionate about affordable housing. They want to create options for families in a growing suburb, a place where there's not a lot of choices. So they find this plot of land in a great school district. Rental demand's high, but there's just not much available. And they picture these spacious townhomes, lots of green space for kids to play, maybe even some community stuff like a playground or a fitness center.
So they're thinking about the whole community, not just building units to rent out.
Right, they get it. They understand what families are looking for, comfortable, safe, affordable homes in a good location. So they prioritize those functional layouts, durable materials, and energy-efficient features to keep those utility bills down. They might even partner with local organizations to offer resources or programs for the residents. It's about going that extra mile.
I love it. Sounds like a long-term, community-focused approach. So how does this all play out financially? How does it compare to that develop and sell model?
With develop and hold, the rewards, they come in the form of that steady rental income and the property value going up over time.
Yeah.
This developer, they're smart about setting those rental rates. Got to be competitive but still profitable, right? Make sure they can cover all the expenses and actually make some money. And then as that community grows, demand for rentals goes up. They can adjust those rents, boost those returns.
So it's building that consistent income stream while their asset is getting more valuable.
Smart. Exactly. And because they've created this desirable place to live, they don't have many vacancies. Always have great tenants to choose from. It's like they planted a seed, nurtured it, and now they're enjoying the fruits of their labor,
Those examples, they really bring it all to life. It's amazing to see how different motivations, different strategies, even the market itself can have such an impact on the outcome.
It's pretty cool. And these are just two examples, right? There are so many possibilities in the world of property development. There's room for everyone, no matter your skills, interests, or even your risk tolerance.
So as we wrap up this deep dive, what's that one key takeaway you want our listeners to remember?
The biggest thing, go into property development knowing what you want to achieve. Understand your resources, how much risk you're comfortable with. Do your research, analyze that market, and pick the strategy that aligns with your vision of success.
Couldn't have said it better myself. And of course, everyone, don't forget to check out Edge. Tons of great info and resources to guide you on your property development journey. They've got you covered.
Definitely. Edge is a must for any developer, whether you're just starting out or you've been at it for a while.
Awesome. Well, thanks for joining us for this deep dive into develop and sell versus develop and hold. We hope this has been helpful as you navigate the exciting world of property development.
Absolutely. It's been a pleasure sharing these insights with everyone.
Happy developing, everyone, and best of luck on all your property ventures.